I've been holding HBAR since late 2022, a time where a lot of people had zero confidence in HBAR. And I feel like a lot of people are spewing information about the markets going totally down under, but I want to be that person to give you the raw facts on what exactly is going on. This is the video to watch if you're in HBAR right now and you're confused, you're seeing this coin at 14 cents, you don't know if it's going to go up or down. I'm going to be breaking it down, but not alone in this video. I got an expert that has been in the crypto markets for a long time. So long, in fact, that he was around before HBAR even launched. He can give context on the narratives that happened to get HBAR to where it is today. And I wanted to give multi-perspective. So instead of getting one perspective on where HBAR is going, I told him, literally, just tell me exactly what you think, bullish or bearish, it doesn't matter. This is the video to watch if you're trying to learn if it's time to do something with your HBAR, or if this is just another moment in the crypto market that we'll forget 12 months time. So welcome to the channel, Michael. This is JDM Crypto, and let's get into the video. So where is your head at when it comes to HBAR right now? Give it to us.
So looking at HBAR, I mean, I'm actually surprised it's in the top 20. Reason why is because I haven't heard a lot from them. I mean, I know that they were pretty big in the beginning of like the 2020 cycles and everything, but I haven't heard a lot of news come out from their ecosystem. So yeah, seeing them at the top 20, usually you want to have either network growth or kind of like, large onboardings or a certain wave kind of kick in. Like some of them have like the DeFi wave or the NFT narrative, like a certain narrative for chains, but I haven't heard any from Hedera recently.
That's very fair. Yeah. So the easiest way to explain why HBAR got to where it is today is because they've been playing it very safe. In terms of the US narrative, they were one of the only cryptocurrencies out there that actually fit the bill for ETFs that didn't get listed as a possible security. I mean, we saw pretty much every crypto in the book get listed as a possible security. HBAR was pretty much the only one that didn't get there. Now, whether or not you believe in HBAR's ability to lobby well or whatever it is, HBAR managed to stay clear, and they managed to stay clear with a council of validators, people that are validating the blockchain of some of the biggest companies in the world, these Fortune 500 companies. They're all incentivized to make HBAR go up or do well, because if they're going to be using HBAR in the future, because of these grants, because of the incentives that they get for being in this council, then why the hell not have HBAR do well? So
wait, my narrative isn't negative though.
Okay, tell me.
So the reason why I'm surprised they're in the top 20 and I haven't heard too much about them means that they were able to maintain their treasury or maintain their grouping, right? Without going full force pushing, right? Like there's some L1s and L2s that would spend, hundreds of millions of dollars in marketing and everything just to kind of push towards that range, and then after that they start dying down and everything. But if you're still able to maintain within the top, top 20 without having too much of the ecosystem blast, which means to me is basically they looked at the market, they understood that they are either going to weather it for a little bit or focus on what their main goal is, which was more of like enterprise and everything. And I think that allows them to also have basically more ammo whenever it does come, where the narratives do come. And I think that the US narrative, they pushed pretty heavily, and that was a really, really big driver for them, right? And that was something that also fits them as well. So one, in terms of marketing, they're able to underspend and overperform, and
100%.
also still basically hold sentiment from the community as well, right? Maintain a top position. And this is like, think of it as like 10% of what they can kind of push. That's what I look at in terms of how they're doing their marketing.
Oh yeah. Yeah, I mean, I covered the meme coin ecosystem very extensively when they were pushing earlier this year, the NFTs. I mean, everything. Even today, we got, what is this? Dead Pixels Ghost Club got posted onto the official Kraken page. I mean, Dead Pixels is the biggest NFT collection right now on HBAR. Do you think that they're paying Kraken a bunch of money for this? No. I mean, they have not been spending. That's the one thing that anytime I talk to anybody in the HBAR ecosystem, and you guys can comment below if you're developing on HBAR, they just don't spend a lot. And that's bad in some ways because, you know, sometimes you want them to spend more when the markets are hot. But a lot of the time, it's good if you want the blockchain to survive. Like if we want HBAR to be surviving for the next couple of years, we need to have proper funding, and we can't have overspending because it's just not going to last. So I don't know how they did it, but like you said, during a time where people were just spending up the wazoo, HBAR didn't have to spend a lot, and they got the results that they needed. So have you looked into HBAR at all? Have you kind of like dissected where you think this possibly could be going in the next couple months?
I mean, so for me, I look at sometimes like historical data.
Okay.
If you look at their, if you look at their price analysis for like their historical data, you see that Q1 is where they typically shine, right? And Q4 is kind of like the lead up on there. So like the January to March timeframe, which is, I mean, it perfectly aligns with where I think the market's about to go, right? Which can actually really benefit them as well. But Q4 is kind of like that wait and stay type of phase. Q1 is where they're going to be pushing off. It does depend though, right? If they were holding back this entire time or so, and then they're going to push for Q1, they should push to be able to dominate, even basically like pull some of the narratives. There's a thing called chain vamping. I guess I coined the term or whatever. Chain vamping is where if there are certain narratives or things that excel really, really well on your chain or others, you can pull them on over to you. So like the DeFi wave, for example. DeFi kind of kicked off on Ethereum, but then it went over to Polygon, it went over to Avalanche, Binance Smart Chain. Like now every chain kind of has that DeFi function, right? So whichever applications are going to be your main drivers, focus on them as like your front horse, right? Your main head driver for the cycle.
And so you're arguing here, is there a reason why Q1 is just magically better than Q4? Because I remember everybody in my comments was telling me that Q4 was supposed to be the top. I mean, Q4 was supposed to be the most interesting time in crypto. Why has that changed? Why are people saying Q1 is going to be more interesting than Q4?
I look at seasonality. So for November, basically like from in a marketing perspective, Q4 is really hard to market because one, it's basically end of year for marketing, which means that everyone needs to blow budget or kind of like do things with that. So there are a lot of competition with it, but also at the same time, you look at in terms of where's your demographic. If your demographic is going to be retail, especially with waves where, I mean, this is pre-institution, right? So the past few years, it's basically all retail that's been in crypto. Seasonality of basically Christmas, Thanksgiving. Thanksgiving is kind of like the Schiller holiday, right? You go talk to your family and you kind of like talk to them about things that you're interested in, and
Do you do
that's
that?
where crypto.
You
Oh,
talk to your family about crypto?
they talk to me about crypto, and I'm just like,
Okay.
yeah.
That's fair. That's fair. Okay.
And then also like Christmas, basically a lot of retail just cash out to, lock in profits. But also for Q4, if you're a big firm that's, a big prop firm or a trading firm and everything, at the end of the year, you want to have good P&L. So you usually want to cash out October, November, depending if you want to scale out and stuff. Just so that you're saying, hey, look, at the end of the year, I did 10 million in profits. So I can fundraise and get more capital from other investors for the next year. But then Q1 is when they start scaling back in and stuff. I think the first 2 weeks are probably going to be a little bit of a lull, and then afterwards we'll kind of kick off. Reason why is because if you scale out and then have to scale back in for Q1, you don't want to just buy in at the, at the top price. You got to push it down a little bit. So that's where it also has a little bit more risk, because also for Q1, you're setting the year. You have more risk at Q1 than Q4, because Q4 you're trying to lock in everything and secure everything, while at Q1 you can degen a little bit and probably make it up Q2 and Q3.
Yeah, makes sense. Makes sense. Yeah, but just don't trade during the summer. It feels like it's always negative. Look at this. Look at this. This is historical data. There hasn't been a single positive June in HBAR's history. That is nuts. I mean, that's
I don't think any of the Junes have been positive for anything.
For any crypto, right? Any of crypto. There are some cool things to look at. There are active developer tenure reports. It just goes ahead and shows you how many developers are on a crypto chain. So this is the industry trend, right, that you're looking at right now. You could see that there are a good amount of newcomers, but they're kind of leaving because they're seeing the potential's not really there. Maybe the money's not there. The established
Probably
ones are kind
value
of staying
capture they
still.
probably have to get to. It's
Exactly.
like whatever happened to that last spike right
Uh-huh.
at the end of 2024, those developers came
The price
on,
went up.
maybe, but then afterwards, like
Literally.
you have to capture it, right? Because in
Yeah.
marketing, it's basically you have the call to action already. You're already having the onboarding funnel. They're all coming in already. It's like you just capture it. If you don't capture it, you lose it, and basically other chains are going to vamp from you.
Yeah. Well, here's the chart for HBAR.
Damn.
Damn, that's what I'm
It's actually
saying.
pretty good.
It is pretty solid, but it's different. So established is a bit of the same. The established developers are kind of dropping off a little bit, but there are a lot of newcomers, a lot of new developers that are coming. I think this has to do with the restructuring of the Hedera Foundation. They used to be called the HBAR Foundation. They moved to Hedera Foundation. They completely redid their team. Swirl Labs redid everything. Everything in HBAR was redone earlier in the year. And all of a sudden, there's actually people interested in this chain. So I'm like, where has the money been going over the past couple of years? I don't want to say exactly where I think it's been going, but I do know that I like the direction of where the foundation is going. I'm glad that there are a lot of new people that are here. I have said this for a while that HBAR is playing catch up. They've been playing catch up for pretty much since the beginning of the year because they weren't doing anything before. And that's just the honest truth. Now they have a bunch of integrations with a bunch of tokenized funds that have entered, things that they should have had years ago, but they now have caught up and definitely have today. I have said that it is a blessing in disguise if we do not get a pump in Q4 because it buys time for HBAR to make the integrations necessary for when the market is hot for them to actually be ready to onboard people. So if we do not get a pump in Q4, I think that's a good thing for HBAR because it buys it time against its competitors to get up to speed. And you see here, there are a lot of developers here trying to build to play catch up, and they're sticking around. So Q1, I think, is going to be a huge moment for a breakout, honestly, in developers coming into HBAR because if the tech's already there, why not build on it?
I think that so usually with developer waves that are onboarding, if there's a large influx of developer waves that come in, say like wait like 3 months or so, and you'll start seeing a lot of dApps being basically like starting to go into production and being boosted and everything to where they start coming to market. So usually it's basically a wave of developers come in, and then basically a wave of developers leave because of competition, of course.
Yeah.
And a wave of applications be released, right? So if we know right now developers are coming on within the next few months, basically, or even within the next year, like applications are going to be deployed on there, right? And
100%.
the trend isn't something that just started recently. The trend started early on in 2025. So if a lot of them are already at that year cycle, they're starting to go to development or going to, go to public,
100%.
basically go to market.
Yeah, I can agree with that. What do you think about cryptocurrencies getting ETFs? Do you think it's a sell the news event? Do you think it actually matters? Do you think this is something that when retail interest is here, it all of a sudden becomes this big thing? What do you think about HBAR ETFs and whether or not they're actually like a thing that we should focus on?
I think for ETFs, there's multiple ways, especially if you look at, okay, you're opening up markets to participants that are very risk adverse. Like some of these funds, they'll allocate 1% of their portfolio or something only if there's an ETF because it's more secure for them. It's easier for them to understand. It already fits into their framework. But like their 1% isn't like small size, it's size. You know what I mean? Like you can have a fund go in a few billion into an ETF if they wanted to. And that's for them, that's small. That's like their risk averse play. I think ETFs do invite in a brand new level of volume that also makes it risky for crypto. But at the same time, it's eventually going to happen. If you have markets that are producing demand for an asset, you're just basically looking at it in terms of, hey, look, instead of us just trading on the crypto side, we're now trading on the the stock side and everything. It's two different markets in terms of volume and pressure. So how those markets merge together is basically up to us to kind of, basically up for us to see, if it is going to be good news or if it's going to be bad news. Because once again, for ETFs, they still have to purchase the actual tokens. The only way to do that is basically whether it's through exchanges or whichever, but they still have to hold it and custody it, which lowers up a little bit of our float, but it makes it to where it is a little bit more volatile. Because you think about it, let's say, for example, of your daily volume, like daily trading volume within 24 hours, let's say it's a $1 billion or so, and out of nowhere 10 billion comes into the picture, it's going to be very volatile, right?
Yeah, 100%. I mean, people are being degens too. Instead of doing futures, they're doing options contracts, which I think is a little interesting. But I wish my friend the HBAR bull the best of luck on his trade. I am a big bull on new markets. I'm never going to say no to a new market. It makes no sense to do that. About 1% of the current supply of HBAR is held inside of this ETF, the one you're looking at right now, the Canary HBAR ETF. That can only be a good thing if a lot of supply is held by institutions, because institutions usually hold on average longer than retail. Now, of course, is retail getting more mature? I don't know. Maybe they are, maybe they aren't. Maybe they have to pay their bills, so they can't hold forever. But as we've seen with Bitcoin,
what's their average buy price?
Their average buy price?
The average
definitely higher than what you're looking at right now. Definitely higher.
You think this ETF you think they launched, like losing money?
Of course not. Of course they don't like losing money. Of course not. Yeah, they launched this very recently. Very, very recently. This is a couple weeks old at this point. So we still have yet to really see. I mean, dude, the price of Bitcoin went down like 25% right after the launch of the ETF. It was bad timing, but how are you supposed to time this? A lot of people thought Q4 was going to be this big thing. And at the end of the day, the SEC only has so many deadlines until they have to say yes. We were supposed to get another ETF launch, the Grayscale one, but they delayed it randomly out of nowhere, the final submission from the SEC. I found that kind of weird. And then right after they announced that Grayscale was going to IPO. So maybe there's something to do with that. They don't feel like taking the risk right now on altcoins. I don't know what it is, but still something to watch. If HBAR gets more ETFs than some of the other players, if they get more volume, is retail interested? Are institutions interested? I looked into the percentage of retail versus institution buys on ETFs, and it's been predominantly retail that's been buying into these ETFs by far, but it's changing. It is changing. Slowly it's changing. Well, I guess gradually is a better word for that. Institutions are getting a lot deeper into crypto. Maybe it's because we haven't gotten full-on regulatory clarity, that we haven't seen these funds just straight up ape into crypto, but we've seen large funds start to look into it. That's why we've seen BlackRock, some of these bigger guys get into it. We just haven't seen the smaller guys get into it, which I feel like is going to be where a lot of that retail/institutional money comes from. Hopefully we get that in Q1, Q2. Maybe that's what people are pricing in, that we're not going to get anything for Q4. But I mean, I'm very bullish on Q1, especially. I mean, have you seen this yet, Michael? The Fed decision in December?
In December?
Yeah. I mean, that's insane. I thought it was guaranteed that we were going to get a 25 basis point decrease, which is bullish for markets, more liquidity. There's 90% odds. Now those odds are down to 34% and 65% for a no change. Could that mess with Q1 price predictions and projections? Do you think that's going to mess with the markets?
They still did say that they were going to ease up on quantitative tightening. I think it's tightening, right? Yeah, quantitative tightening on.
Yes. They said they were ending it
on December 1st. So we have like about 2 weeks. So for them, if they feel like, hey, look, instead of giving them both, because then they know for sure it's going to be a bull market, literally on December 1st, let's just give them one. And also, I think that since one of the things that the Fed loves to freaking say is, oh, based off of the data, or we don't have enough supporting data. the government was shut down for a while, so they actually don't have a lot of the data,
Mhm.
right? So they're playing catch up with it. So to be safe, I think it is probably a better decision, right? This is probably the only decision where I'm just like, okay, maybe you just wait a little bit and then reevaluate on January. But if it's confirmed in January, I mean, eventually it has to come, right? If it's not December, for sure, it's going to either be January or latest. I don't even think March. I think January they should see enough of the data to basically say, hey, look, we probably have to stop because the markets are bleeding way too much.
Mhm.
And if you have it to where a market just continually gets hammered, it's something's bound to break. Something's bound to happen. If you push shorts way too much, what happens is that there is going to be one God candle, and that God candle is going to kill a lot of the shorts just to wreck them enough to the point where it does a reset.
Yeah.
And I think the markets have been pumping like crazy, regardless of the decision. But also at the same time, whenever we're having a downward turn, I mean 30%, right, within a month. 30% within a month, it pushes us to the area of it's a slow burn too. It's not something that's, a quick, hey, look, here's a wick, it clears out within a week or so. No, this has been a slow burn. And also having the flash wick as well. The flash wick day, I think it was on the 18th of last month or so. The
Yeah.
the flash wick basically liquidated majority of the leverage of the market. You look at a flush, and then you look at now it's going to a downwards. What happens next has to be the upward side, and then maybe a return to mean, which is basically if we're down 30%, we'll probably retest 30% up, but it's not within that range of 30% up to basically be back at break even. No, it's 30% above what our all-time high is, and then afterwards kind of come down for a mean, basically in the middle, and then see which direction we want to go. Because by that time, you can have it to where the markets can set up longs and shorts properly, and then it'll actually be a fight. After a wreck out, it takes both sides, so shorts and then longs, or longs and then shorts, to fully see where the range of the market is going to be.
Yeah, something else I'm also very closely monitoring is the NASDAQ, because the NASDAQ tracks, for the most part, tech companies, a lot of them in AI, that are trailblazers that have been outperforming the market heavily. But lately, they have been underperforming. I mean, they've been doing the exact opposite. They've been doing pretty poorly against some of the boomer companies in the Dow Jones. This, I think, kind of lets us know where crypto is headed, because the way I see it, a lot of people, at least back then, saw Bitcoin in the same wavelength as technology. If you're betting on tech, you're betting on crypto. And the way the marketing was set out for Hedera when they did the rebrand for the Hedera Foundation had a lot to do with not only the US narrative, but AI. I mean, they were getting deep into AI agents, agentic AIs, doing transactions on chain. They've done some updates on it, but nothing too crazy. AI just hasn't been doing well. So they've been getting kind of a double whammy of the US narrative weakening just a little bit, as well as the AI narrative weakening. But if we do see a resurgence in the NASDAQ in AI, as well as the US narrative, if the US starts getting hype again, and these people are, maybe like a regulatory bill passes and all the cryptocurrencies that are associated with the US start going up, HBAR is going to be a massive beneficiary of it. I mean, they could just double tap into what made them so successful back in late 2024. And if they just stay steadfast, I mean, it's just, once again, they save a bunch of money in marketing and they tap into a narrative that's very hot.
And I think that the narrative as well is usually it's never the first peak that's going to make it to where it pops off and everything. It's usually the second peak.
Yeah.
And that second peak is usually where, I mean, for example, when DeFi was on Ethereum, I mean, Uniswap, no one used Uniswap. The V2 side, literally, like, not a lot of people used it in the beginning and everything. And then, I mean, like V1, sorry. V1, not a lot of people used. V2 is when people started using it and everything. And that's where the Uniswap airdrop and everything happened. And that created kind of like, it cemented it in the industry, right?
Mm-hmm.
You look at NFTs, a lot of people in the beginning didn't purchase CryptoPunks. They're just like, oh, cool, it's something that's going to be there. I mean, CryptoKitties and a lot of the NFT projects as well. Same thing for them. It took them to the second cycle the second iteration to actually fully pop off, and that's when Bored Ape Yacht Club and gaming also the same thing as well. Super early on, not a lot of people wanted to play on-chain games, and then after that, play to earn happened. So I think that for AI, we just had a brief taste of what it is, and then afterwards, we're going to see products that are going to change, our valuation of like how we view AI. Because in the beginning, it's always about testing, and it's like developers. You're onboarding a wave of people to test and tinker, and then afterwards, the products that are going to stand out are going to be the ones that are going to dominate the industry.
Okay. So to end the video, the thing that everyone wants to know, I cannot give you a price prediction per se, but are we net bullish on HBAR in the coming calendar year, or are we bearish? Would you say that if someone's holding HBAR right now, they shouldn't be DCAing into it, they should be selling it? Or would you say, continue to DCA into this coin? It's time for a massive run in Q1. Of course, not financial advice. This is something that we are advising to ourselves. Go for it.
So this is my take. I mean,
Be
you
honest.
guys can take it however you want to. If you look at who were the backers for Hedera, I mean, their ICO was in August of 2018, and the ICO price was 12 cents. I'm pretty sure, I'm pretty sure TokenSoft still has some tokens in there, right? And they're not going to settle for a 0.2 in terms of like a 1.2x in terms of whatever there's left available for it. Same thing for a lot of other investors as well, is that if you're looking at the price versus the distribution, right? If it's able to maintain, that is actually pretty bullish to me, right? You're still able to maintain within you're pushing all the way up through the inflation to the top 20, but you're also able to maintain structure with it as well. I think that for once they actually do push, that they are going to do pretty well. I'm not going to say like, oh, they're going to go to $5 or whatever, because honestly, there is a lot of tokens out there, right? Like it's basically like 85% of the max supply is out and everything, which is a little bit better because it's basically more participants are in versus a low float high FDV, where it's like, hey, look, we're valued at $6 billion, but we have 1% in the market. It's gonna be super volatile. While this one has a lot of participants that are going to make it more liquid in the markets, and especially with the ETFs and everything, I would look at it as like a negative on the float, right? Because that 1%, I don't think they're going to sell out completely of the 1%. Even if there's outflows and stuff like that, they're never going to make it to where it's like, hey, look, we hold 0 as an ETF because all of our clients left. No, there's going to be clients that are going to be holding on to it, which adds into a little bit of taking away from the liquidity side of like active markets. So actually, I do like how their price is at currently, but we'll see. We'll see how they fare up whenever it's the PvP between chains, because that's where the big catalysts are usually pushed. It's basically the PvP section and which one's able to capture faster and able to convert faster, but also at the same time be able to prolong developer sentiment, because if you take care of your developers, they build great products, they're going to take care of your users for you, because your users are going to stay because of the easeability and the usability. Versus, hey, look, there's the 50th lending protocol, right? Like, if there's new innovation that's happening, then I think that is going to be a really positive thing. But also for that too, competition is also very high. I mean, one of the things is that their FDV is close. Their FDV is right, what, 7.17 right now?
Yeah.
Monad is launching.
Soon.
I'm not going to say it's going to do well, but I think it's around the same FDV. For them, that's basically their, it's another chain that's adding into the fold for competition. The only difference is that they're going to probably do high FDV, low float, same thing. But the thing is, over time, Hedera has a stronger foundation in terms of basically more tokens in the market, so that it's harder. It's going to be harder to swing. And also for market makers, it's going to be harder to kill. It's harder to control.
So you'd say their biggest competitors are new chains that are launching today,
because they're fresh liquidity.
Yeah.
And those guys are basically make it or break it, right? So they're going to come out swinging with high amounts of dollars to kind of push for marketing. The only thing though is that if they do it properly, then they'll convert. If not, then a smart way would probably be able to have the other chains spend, and basically you piggyback off of it in terms of if it's AI and they're competing against AI, cool, thank you. I spend less for AI and you just help me push the AI narrative to my chain because I'm basically the competitor for you. And they're going to be spending money for your marketing if you do it properly, if you angle it properly. But for them, I think they're more worried about enterprise and institutionals and stuff like that. So their backers, I mean, Google, IBM, like Google's already, they just released out Gemini 3. So
You were using it before this video, literally.
I
Yeah.
literally was. I
Use it all
literally
the
was.
time. Yeah.
So it's like there are a lot of great partnerships that they most likely have already, especially being on the council. Like they do have favoritism, so it's an advantage.
So net bullish, net bearish.
I'm bullish. I'm bullish on Hedera.
Bullish. Okay. Very fair, and it's hard to get out of Michael because Michael's like very conservative. He goes degen sometimes, but
I hate telling
give
people if I'm
numbers.
bullish or bearish, just because like, all right, if I tell you it's gonna go to $1 and it's like, oh, he didn't go to $1, I'm like, all right, cool. But at the end of the day, did you onboard onto the ecosystem? Did you make money off of it? You did? Cool. You're net positive.
Fair. Very fair. I think more people need to be like that. There are too many influencers out there that just keep spewing these BS numbers because they are going to get a bunch of views. And then you're just supposed to buy into it because you already own the cryptocurrency. And if you lose money, who cares? I mean, they got their ad revenue. It's better to give people the honest truth.
Think of it this way. Even if Hedera stayed at 15 cents, like let's say 15 cents, if it stays at 15 cents, the thing is, in order to onboard onto the ecosystem of Hedera, because all these developers are coming on, right? What happens is that they're going to utilize HBAR. And whenever you're trying to buy their token, you're most likely going to need HBAR. Or you're going to have to utilize HBAR in some way. Even if you switch to a stable and stuff like that, you're still on the network. The network indirectly would benefit from it. So it's kind of like why ETH was really, really popular super early on was basically to pay for ICOs, right? The base currency that you're going to need, and the currency that of the ecosystem is going to be their token. So if you're bullish of the ecosystem, basically like the developers of the ecosystem that are coming on, that are about to release and stuff like that, they're going to leverage the token. And an easy way to do it is just get basically exposure of the infra.
Fair take. Very fair take. I mean, I would say that, I mean, obviously I have bags, I'm bullish, but I'm very biased. So that's why it's good to have you on. I have a pretty large position. I think that they have an inherent advantage over a lot of the other cryptocurrencies in their specific niche. They're going for the enterprises. They're going for the institutional capital. They don't really care about quite literally anything else. They're building up the infra because they're getting ready for another US push. If we get a US push, HBAR is going to go to new all-time highs. If we don't get a US push, then they have to pivot to another narrative. There are a lot of people that just think that you could just bundle up a cryptocurrency into an egg and that's it. But no, there are many different baskets with many different eggs and many different narratives that are constantly changing. I mean, today it's prediction markets, but next month it could be AI, and the next month after that it could be gaming. I believe it's an ecosystem's resilience against change that makes it strong. And as I saw it when I first bought HBAR many years ago at 4 cents, I saw that this chain
flexing his bag
was steadfast. It was steadfast, man. I mean, I say it because there were so many people at that time that just did not care about anything in crypto because it had to be interesting. It had to be explosive. It had to be this and that. But the cryptos that won were the ones that stayed in the path. They're the ones that have a roadmap 10 years out. They don't care about what's happening this cycle or next cycle. They care about what's happening next generation. You know what I mean? Like they're setting up for long-term growth, which is what you're supposed to do with a chain. And that's why I got into this crypto in the first place. So my hope here is they get enterprise adoption leading into Q1. The US becomes interesting again when it comes to crypto because they pull more bills out there that make it easier to trade crypto. And it's good for everyone involved. I don't think it's going to be good just for HBAR. I'm very bullish on many different cryptocurrencies. So I'm bullish, but I'm also biased. That is our price predictions in this video. If you enjoyed the content, guys, like and subscribe. Thank you for watching. 34 minutes long. I'll see you guys on the next one. And that is all.